So I welcome you all for the one-day BARC workshop session to empower, inspire, mentor young people by giving them the skills they need to support the growth of our national youth. First job, human capital, establish a comprehensive plan for preparing strong and skilled youth communities to empower, to provide employment opportunities for our national youth, to plan, lead, and contribute the pan India job fairs, to schedule the interview sessions and choose the candidates as needed. We are developing and focusing on several goals for successful recruitment pathway. The world of work and business is always evolving, and thanks to our breadth and depth of our of expertise gained on the international stage, we are able to deliver fully integrated labor force solution that will support your organization requirements. So once again, I am just welcome you all. So today is the our speakers, Mr. S. Anbarasu sir and Mr. Naveen sir. We welcome you for both for this one-day workshop on behalf of For Job Human Capital. We welcome you, sir. Mr. S. Anbarasu sir is a designated chartered accountant with over 20 years, 21 years of professional experience, specializing in international taxation, corporate audits, and system audits. As the co-founder and senior partner at Ms. Anbarasu and Jalabadi, he has led high impact advisory and audit engagements for large corporate across industries. Renowned for his own strategic insights and regulatory expertise, he brings exceptional command over cross-border tax compliance, risk management, and corporate governance framework. We welcome you, sir. Now, Mr. Naveen VS is a chartered accountant specializing in direct taxation at Anbarasu and Jalabadi Chartered Accountants. He has several fruitful years of focused experience in the field with a strong track record in corporate tax management, tax assessment, and regulatory compliance. His core expertise span corporate audits, international taxation, and statutory compliance. Naveen has collaborated with clients across various sectors, consistently delivering values through effective tax planning, strategic compliance approach, and through the audit execution. Beyond his technical proficiency, he plays an active role in advisory services, helping businesses with the tax structuring and optimization strategies in alignment with evolving legal and regulatory frameworks. Recognizing for his analytical mindset and systematic approach, Mr. C.A. Naveen VS offers practical insight into the complexities and opportunities of India's direct taxation landscape. Welcome you, sir.
Hello, sir.
Once again, I'm just welcome you all for this session. I'm handing this session to the guest and the speaker of Mr. V.S. Naveen. Thank you.
Thanks for your welcome, sir. Today we're going to see with income tax returns and what are the key classes of income tax tax audit report and what are the major compliances that we have to comply for what are the major compliances that we have to comply for companies under MCA. First, we just go through with slab rates for the individuals and applicable for companies. For financial year 24-25, up to 3 lakhs of income, and there is a nil rate tax under new tax regime. And from 3 lakhs to 7 lakhs, it's 5%, and 7 to 10 lakhs, it's 10%, and 10 lakhs to 12 lakhs, it's 15%, and 12 lakhs to 15 lakhs, it's 20%. And above 15 lakhs, it will be tax will be 30%. For old tax regime, for financial year 24-25, for which we need to up to 2 lakhs nil rate of taxes. From 2.5 lakhs to 5 lakhs, it's 5%. and 5 lakhs to 10 lakhs, it's 20%, and above 10 lakhs, it's 30%. The rebate under old tax regime is 12,500, and new tax regime, the rebate is up to 25,000. Based on this, we can claim up to 7 lakhs of income. There is no tax for new tax regime, and up to 5 lakhs, if your income has not crossed above 5 lakhs, you can have rebate up to 12,500. There is no tax up to 5 lakhs in old tax regime, and new tax regime, there is no tax up to 7 lakhs. The same as for financial year 25-26 that we consider for the current financial year. There is a change in tax rate from the recent budget. Up to 4 lakhs nil rate, and 4 to 8 it's 5%, and 8 to 12 it's 10%, and 12 to 16 it's 50%, and 16 to 20 it's 20%, and 20 to 24 4 lakhs it's 25%, and above 24 lakhs it's 30%. The same as there is no change in old tax regime. Up to 2 lakhs it's the same, whatever the applicable for financial year 24 25, it's same applicable for 25 26 also. But in new tax regime, the rebate is 60,000, for which the salaried person who has up to 12 lakhs of income, there is no tax. Why? Because up to 4 lakhs there is nil tax rate. From 4 to 12 lakhs, we need to pay 60 lakhs of 60,000 as a tax. But for using the rebate under Section 87A, there is no tax up to 60,000. But if you have a capital gain, then you will not consider under this 12 lakhs bracket, because if you once you opt for new tax regime, if you have short-term capital gain, you need to pay tax irrespective that you have income below 12 lakhs itself. And next, taxation under presumptive taxation. Presumptive taxation means you can opt for lower rate of taxes, which means for individual and HUF, you can opt for presumptive rate of taxation under 44AD. The 44AD is not applicable for agency commission and brokerage persons. Threshold limits for a turnover is total turnover or gross receipt is up to 2 crores, and whether the all receipts and is only in cash, not in cash, then it's turnover has increased to 3 crores. Presumptive income, if 6% of turnover or gross receipt received is in prescribed mode, means not in cash form, we can charge as 6% is total total turnover or gross receipt, and for 8% of turnover or gross receipt, if it is received in any other mode, that means if a cash also included in cash receipt also included in turnover, then we can take presumptive income as 8% of turnover as net profit as our total income. For 44 ADA is applicable for individual, HUF and firm engaged in certain profession. That means profession means legal, medical, and engineering, and accountancy, etc. Gross total receipts is up to 50 lakhs. You can opt for presumptive taxation. If gross receipts is extended to 75 lakhs, for those who do businesses with not exceeding total receipt is not exceeding 5% in cash. The gross receipt you need to show as presumptive income is 50% of total receipts in a year. Next, the tax rate. The tax rates applicable to companies. If normally the tax rates for companies is 30%, but the turnover during financial year 23-24 is less than 400 crores, means you can automatically you can go for 25% of tax rates. For opting section 115 BAA, tax rates for it is only applicable to domestic companies. The tax rate is 22% plus surcharge 10%. There is no deductions or exemptions to be claimed under if you once section 115 BA is opted, and there is no deductions under chapter 6A and any other deductions to be claimed under not normal provisions. Whatever the deductions we have claimed, there is a restriction, and carry forward of losses is also not available under this section. Section 115 BAA, it's only up to 31st March 2024. This section is now not applicable, not in only the new manufacturing entity. The tax rate is 15%. If a company is newly incorporated and it's start commencing manufacturing production, it will it can opt for 115 BAA. It opt for 115 BAA and the tax rate is 15%. Once the section 115 BAA and BAB is opted, there is no opt-out of this section. It is a compulsory. Once you opted for this section, you will not go for a normal normal regime taxes. That means you cannot go for 30% rate taxes. It will once 115 BAA is opted, it is not. You cannot go for regular taxes. Key deduction last under if you opt for special rate of taxes is section 10A. Says if you opt for if your unit is in a special economic zone, you cannot have a option to claim under 115 BAA and BAB. And section research and development expenditure is not also not allowed. And if the company is a startup, you can opt for 80 IAC, which means upon a period of 10 years, you can have a tax exemption for 3 years once you register for 80 IAC. This deduction also not available if you claiming for lower rate of taxes under section 115 BAA. Additional depreciation also not applicable. Only the manufacturing entities are available to claim additional depreciation. For normal rate of taxes, it is not allowed for 115 BAA if you opt for 22% of taxes, and MAT credit also not available. And there is no MAT taxes under section 115 BAA and BAB. No setup of previous year. Once any domestic company can opt for 115 BAA and pay taxes under 22%, but there is no carry forward. If they opt for this section, there is no carry forward of brought forward losses or disallowed deductions cannot be carried forward to the further subsequent year. Once you have a carry forward loss, you first set up the carry forward losses and you can opt for section 115 BAA is a good option. Consequences of opting 115 BAA. Once opted, it cannot you cannot go back to normal tax assessment regime. That means 15%, 30% or 25% losses in all future years. No deductions of losses. You cannot, if an year is you have a losses, then it will not be applicable. Long-term tax savings only if the company doesn't depend on incentive. Become critical for startups and R&D focused firms. Latest update on income tax filing. Recently, the filing of income tax return is extended for individuals. For a person, those who need to file on or before 31st July is extended to 15th September 2025. The structure of ITR 1 and ITR 4 is for assessment year 25-26 has been released Excel utility yesterday. We can file for income tax return. Those who are applicable for ITR 1 and ITR 4. The due date is extended from 31st July to 15th September. For those persons, is required to file income tax return within 31st July. Can anybody tell the is income tax return is mandatory for all?
As per your guidelines, as per the government norms, when we go above the slab, we need to make the income tax payment, sir.
Yes, it's correct. Once the slab rate is more, you can we need to file income tax return. There are a few other cases also we need to file income tax return.
So people are responding in the chat box for your question. Yeah.
One of the participants, Mr. Shelton Emmanuel, has mentioned that mandatory for income tax about 2.5 lakhs.
Okay.
One of the participants, Mr. Ramesh Argum, has mentioned mandatory for income above 7 lakhs.
It's not correct, sir. It's only if your income is exempt above your basic exemption limit, you need to pay. You need to file income tax returns. Okay. There are a lot of cases where whether our income is less than our basic limit, also we need to file. That depends on the cases. It's deposits in our current account is 1 crore or more, we need to file income tax returns. And in our uh, say deposits in saving account exceed 50 lakhs, or we need to file income tax return. If we spend foreign travel for more than 2 lakhs, even if our basic exemption limit is less than 2.5, total income is less than 2.5 lakhs, also we need to file income tax return. Electricity bill, annual electricity bill exceeds 1 lakh, also we need to file income tax return. And TDS or TCS deduction for 25,000 or more, for a senior citizen, it's up to 50,000. Is a it crosses the limit, we need to file compulsory ITR, income tax return. And business turnover exceeding 60 lakhs in a financial year. If your business turnover exceeds 60 lakhs, but your profit is less than 2.5 lakhs, also total income is you need to file income tax return. And gross receipts for profession exceeds 10 lakhs, we need to compulsory need to file income tax return. And combined TDS and TCS during the year is more than 25,000 or more, we need to file a compulsory income tax return and during the year. Types of ITR forms. Okay. For ITR 1, who need to file means resident individuals having income less than 15 lakhs, or from salary, pension, and one house property and other sources. If you have two house property income, then you need to file under ITR 2. For individuals, ITR 2 is applicable for individuals and HUF not having income from business or profession. Business or profession is not included here, and but having capital gain, foreign income assets, or income above 50 lakhs, or owning any unlisted shares, being a director in a company, need to file under ITR 2. You need to mention, if you are a director of a company, you need to mention in the an ITR, in which company you being a director. Or is an option available in ITR form. You need to compulsorily mention that. And ITR 3 is applicable for individual and HUF with income from business or profession, including those who opt out of presumptive taxation. If you opt for presumptive taxation, also you can file using this ITR 3. And ITR 4 is applicable individual and HUF and firms opting for presumptive taxation other than LLP. LLP for ITR 4 is not applicable. LLP you need to file under ITR 5. ITR 5 is applicable for LLP, AOPs, and the BOIs, not companies. For ITR 6, it's applicable to company. If you're being a company, you need to file under ITR 6 claim. But if a Section 8 company is registered under 12A, so then ITR 7 is applicable. If you being a company, then also you need to file under, if you have valid registration under Section 12A, you need to file under ITR 7 only. Companies under Section 8 and trust and charitable institutions are to be filed with income tax return under ITR 7. Then the next process is next is a tax audit. Tax audit is basically examination of financial records uh, of a company or a firm or individuals, which is majorly for the purpose is to report accurate income, to avoid tax evasions, and to claim valid deductions and exemptions, to streamline the tax administration and reduce tax evasions. Majorly, tax audit is filed by chartered accountants. The there is a limit for tax audits. It is not applicable to all. The limits is prescribed as below. For business, if your turnover is more than 1 crore, you need to file a tax audit report. Or if your cash receipts and total cash payments is less than 5% of total receipts and payments, then tax audit limit has been increased from 1 crore to 10 crores. For profession, it's a receipt. It's a for profession. The total once tax audit is applicable if your income is exceeding 50 lakhs. And for presumptive taxation, if you are opting for presumptive taxation, section 44 AD and 44 AD, but you are showing income less than 6% or 50 percentage of total receipts, then you need to file tax audit return compulsorily. Applicability of tax audits. Next, tax audits form. 3CA used to 3CA and 3CB is filed by chartered accountant. Which include 3CA is applicable for audit under other law. If companies are must compulsory audited by chartered accountant, 3CA chartered accountant, and 3CB audit under Income Tax Act only. Okay. The 3CA and 3CB containing the if any qualification to be filed by auditor, then 3CA and 3CB to be used. And for other data relating to companies, 3CD, the statement is particularly applicable. For details of there are 44 classes in 3CD. It's majorly the compliances and disallowances, deductions, and mandatory parts of tax audit report. There are in 44 classes. There are few classes are most important. It's having whatever the deductions and the disallowances to be reported. Form 3CE, audit of non-resident and foreign company, used when foreign entities operated in India without setting up a business. For foreign entities, those who does not have place of business in India, they can file using 3CA and 3CE. Applicable under section 44 AD for income connected to a permanent establishment in India. Only the income relating to in India, they can use form 3CE and report it through that. Most important classes of tax audits. In class 10, nature of business or profession states that any activity and any state main activity and any change therein during the year essential for classifying income and determining relevant provision, including all significant if multiple line of business exist. Changes in nature of business must be clearly stated. Manufacturing or trading. In class 10, we need to mention the companies doing trading or manufacturing activities should be reported correctly. If there is any change, there need to be compared in ITR, the changes should be correctly mentioned. There is no deviation between nature of business should not be different from GST and the income tax ITR filing and any other on the MCA portal. And practical examples of these classes is change in nature of business. Companies shift from manufacturing to trading without updating in PAN or GST profile. That's need to be there is a mismatch in identifying the nature of business in a GST portal and income tax portal. So we need to always update the relevant authorities and disclose the changes in this class. So we need to update correctly whatever the changes in the nature of business during the current year. We need to verify it's corrected in all GST and income tax portals. So it will not mismatch with any other classes. The next class is class 20. There are total 44 classes is there, and I purely selected what are the important classes is here. PF and ESI and other funds. Required to report employees related expenses covered under section 36(1), 2 and 43B. This class only reports the employee funds which is ESI or PF that has been deducted from his salary, which need to be deposited within due date. Due date include focus on whether they have paid on time to claim deductions. Delayed employee contribution is not allowed even if paid before return filing. There is a classes sometimes some expenses have been allowed that has been filed within the due date of filing income tax return. But here once the employer's contribution is not paid within the due date, that means 15th of the following month, then it will not be allowed even after being paid within due date of filing return. Due date of filing return is uh, for tax audit cases it is 30th September, but for if you paid before the due date of tax audit return also, then it is not applicable. That is, you cannot claim exemption under this section. That is fully disallowed, and total whatever may be the contribution relating to employee will be disallowed. Bonus, PF, ISA, and gratuity leave encashment. Totally employee PF, example employee PF 50,000, reduction in April 2024, but paid to EPF on fund on 25th May 2024. The due date is 15th May. The contribution is made after the due date 15th May, but total entirely 50,000 is disallowed while filing income tax return. The next class is payment to micro small enterprises as per section 15 of MSME Act. In this class, we need to show the total amount payable to micro small all enterprises during the year is to be reported. Out of the above payment, within the time limit under section 12 of MSME Act to be reported. Out of the above payment paid within the limit and inadmissible for the previous year is also to be reported. The MSME classification, there is a change in previous budget. For the current year from 1/4/2025, there is a change in MSME limit. Micro enterprises current investment and is a current last year limit is 1 crore, but a current revised limit is 2.5 crores. From turnover limit is extended to 5 to 10 crores. Small enterprises, its turnover is previously 10 crores. From 1/4/2025, 25 crores, and investment limit, sorry, from turnover limit is 50 crores to 100 crores extended, and from medium enterprises 50 crores to 125 crores for investment, and for turnover increase from 250 crores to 500 crores. From this, there are most large number of my MSME and enterprises has been covered under this class. Whether the agreement regarding terms of payment which exists between buyer and supplier is there means if yes, on or before agreed date of payment or 45 days from the acceptance, whichever is earlier. We need to pay before 45 days or from the date which have been agreed, whichever is earlier. For if there is no agreement between buyer and supplier, then payment need to be made within 15 days from the date of acceptance. The date of acceptance in this regard is the delivery of goods or rendering of services, whichever is early. Here in this class, we need to in MSME we need to report total amount payable, and out of which the amount is paid, and out of the above payments paid within the limit and inadmissible during the previous. If under this class, if the payment is delayed, the total amount is disallowed under this class. The payment will not be allowed as deduction. Once paid, it will be allowed in the next year. As payment to specified person. In this class, if we pay, the payment is made to related parties, then we need to be reported under this class. Under party A to A to B, including directors, partners and relative and group companies. If we have any transactions with directors and his relatives and a group company of the it's been subsidiary company or holding company, we need to be reported under this section. What is the sales made? What is the purchases that we have made? And what is the amount paid and amount received for the sales and purchase transaction? What is the pending amount in this regard? At the end of the year, we need to report it under this class. If it is not in arm's length price, then we need to it's depending upon the assessing officer. The assessing officer, he may allow or he may disallow the income. Using this, if for example, if a company pays 1,50,000 per month as a consultancy fee to a firm owned by a director's spouse, but it's not in the arm's length price, then the assessing officer may disallow the expenses as per the industrial practices, and he may allow lower as not even he may allow 1 lakh as arm's length price, and he may adjust 50,000 to add to your total income, and he will raise the demand further. Next class is section 26, 43B disallowances. Discloses expenses only on actual payment. That means once the payment is actually made, then only under this class we can claim deductions. Example, PF, ESI, taxes, interest. Under class 22, we have seen only employees' contribution. Here we see employers' contribution to PF, ESI. If employer contribution is not paid as on the due date, but it is paid within date of filing income tax, before the date of filing income tax return, due date of income tax return, then we can claim deductions under this class. State whether specific liability were paid on or before the due date of filing return. That means taxes, GST have been paid for to March, whatever the pending amount is there. If you paid within the due date, we can claim reduction under this class. If it is not paid, it will be disallowed. Example is employees claim deduction from PF deposits for March salary is in November, disallowed since not paid before the due date of return filing, section 19. Due date of filing return is 31st October. If it is paid only in November, then it will not be allowed as deduction under the previous year. Class 31. Acceptance, repayment of loan, deposits and advances. If section 269 SS prohibits acceptance of loan, deposits or advances of 20,000 or more in cash. In section 269D, it prohibits cash payments of loan, deposits or advances of 20,000 or more. The penalty is 100% of amount accepted or repaid in cash. Whatever the amount we have received in 20,000 or above for a loan or repayment, then it will be 100% disallowed under this section. So if any loan has been taken, then it should be in other than the mode of cash if it is more than 20,000. The example is receives 25,000 as loan from Mr. B, violation of section 269 SS. The entire amount which have been received is disallowed under this section. We need to pay tax for whatever the loan we have received also. TDS and TCS comprises class 34. Under this class, we need to report nature of payments under which is
contract or profession or salary, we need to report that. The amount paid and TDS and TCS deducted and deposits under relevant sections. Under the 34B, confirm if quarterly TDS and TDS return file and the date we need to mention there in this class. And 34C disallows in interest paid for late deductions, deposits and disallowance under section 40A 1A. If TDS is not deducted for a certain contract or profession, then we need to disallow 30% of the total bill value as disallowances under this section. Only TDS is deducted, then it will not be disallowed. If it is not TDS is not deducted, the 30% of the total expenses is disallowed under this section. The example is this: TDS deducted but not deposited within the due date also. 30% of such expenses get disallowed, and interest and penalty under this section is also disallowed under this section, under this class. 44 AP. Under this class, we need to report GST registered and unregistered. Whatever the expenses we have booked, we need to specifically segregate it and give registered from a person who what is the expenses we have made, and from unregistered person what is the expenses we have made. For this, mostly we didn't have in tally. Only we have only IGST, SGST, and CGST heading. We need to have whatever the percentage that GST is majorly it's from 12% and 5% and 18%, 28%. We need to segregatedly having for each percentage. We need to create a ledger. CGST 12%, 18%, like that for all CGST, SGST, IGST. We need to report whatever the expenses made to from registered person and unregistered person. We need to correctly report from this section. So we for this section we need to having in a tally while making entry itself. We need to correctly enter the transactions. Then only be able to give the correct breakup for this class. It's the last class of the 3CD. Majorly the at the time of tally, the entry it's once it's has been implemented, then only we have to we will be able to identify the breakups, and we need to give it properly under this class. Otherwise, it will be so complicated to give the data under this class. Next is the major compliances with the MCA portal. There is a lot of returns to be filed under income tax returns under MCA, annual filing documents, and even driven filing documents. What means annual filing documents means financial statements and annual returns, and even driven filing means if any director retired, we need to file DIR roll. Like this, we have a lot of event driven forms need to be filed to MCA. First, we have seen one by one. What are the returns? What are the major compliances that we have to file with MCA while we have registered as a company? A company should have at least 4 board meetings in a year. The interval between 2 board meetings should not exceed more than 120 days, and conduct annual general meeting within 6 months from the end of the financial year. Annual general meeting should be conducted from within 6 months. That means if the year ended is 31/3/24/25, then AGM should be conducted before 30th September 2025. Next is appointment of auditor. ADT1 should be filed within 30 days from the date of AGM. Once the AGM is concluded, the appointment of auditor is made, then within 30 days, the ADT1 is to be filed, and financial statement for AOC4. Audited financial statement are approved by the board or shareholders at AGM. Form AOC4 must be filed within 30 days from the date of AGM. Annual return MGT7 and MGT7A. Every company must file an annual return MGT7A for small companies and one within 60 days from the date of days after AGM. Director KYC 3. These are the documents that is compulsorily if you register as a company that you need to file compulsorily for annually. All directors must update DIN and KYC 3 online. DIS 3 KYC is due date is 30th September. Within 6 months from the end of the financial year. Deposits and loan DPT 3. A company must disclose deposits and outstanding loan and non-deposit borrowing annually. Form DP3 is to be filed by June 30, even covering prior to financial year. DPT3 is to be filed even if no loans or deposits is also available. Is having the company, then compulsory need to file DPT3. MSME 1 half yearly need to be filed. MSME is to be filed. The document is to be filed on two intervals on April 30 and October 31st of every year. Other annual filings, additional annual returns including MGT 14. Board must also file under any specific resolution or board resolutions. Then MGT 14 must be filed within 30 days of passing the resolution. These 8 files are compulsory need to file at MCA. Even the company is also having any transaction during the year. Next, event driven forms to be filed to MCA is if any idea at all is to be filed within 30 days. Appointment, resignation, or changes in directors or KMP, then DA at all need to be filed within 30 days from the date of change. Allotment of shares, any allotment of new shares is done, then PAS 3 to be filed within 30 days from the date of allotment. Charges on assets, charges 1 and charges 4. When a company creates or modifies charges, that means if you have brought any loan from a bank or any financial institution, then we need to file charge form within 30 days of creation. And once the loan has been repaid, then charges G4 to be filed within 30 days from the satisfaction of charge. Change of registration office, INC 2022. Relocation of the register office requires board or EGM approval and file form INC 22. Register office should be shifted only board and external general meeting approval or annual general meeting approval of shareholders only. If the same, if within the same jurisdiction, file INC 22 within 15 days of the resolution. Other events, in generally any specific resolution or changes in capital or management requires corresponding forms to be filed to ROC. Typically within 30 days, whatever may be the change, we need to file the respective form to ROCs. The major consequences to directors and key managerial person. If annual return is not filed for three years, then disqualification for 5 years being appointment or reappointment as a director in a company under section 164 2A. If annual return is not filed for 3 consecutive years, the director is the director in the company is not eligible to appoint as director in any other company for 5 years from the date of disqualification. And DIN not KYC updated by 30th September. If DIN is not KYC updated, then automatically DIN become deactivated. You cannot sign any form in a MCA portal, and 5,000 penalties per director. Late filing of AOC 4 and MGT 7. And if annual return is not filed within due date, the late filing will be 100 per day, or penalty plus penalty on directors 50,000 plus 500 per day for continuing default under these sections. Failure to maintain statutory register, fine up to maintaining of books of accounts and other related documents if it is not maintained. Fine up to 3 lakhs on the company and 1 lakhs on the officers. Officers means managing directors and the directors of the company. Payment toll is not filed within 30 days, then the penalty will be 2 times or to 12 times of the nominal fees to be paid for the period. And the CA report, cost auditor report, within 30 days, cost auditor report to be filed. For late filing, penalty range from 2 times to 12 times of the nominal fees. Ben 1 and Ben 2, significant beneficial owner. Significant beneficial owner means the company has it's a holding company. That company has another subsidiary company. Company has another holding company. Then the significant, then the ultimate holding company is the significant beneficial owner. The win form should be filed within 30 days. If not paid, then a penalty will range from 25,000 to 50,000 on the company and the offices. MGT 14. If any special resolution not filed, then 1,000 per day on the company or offices. MGT 15. The AGM report of listed company. The listed company should be filed MGT 15 within 30 days of the AGM. If not paid within 30 days, then penalty will be 5,000 per day. And PAS 3, return of allotment of securities. That from the within 30 days need to be filed. If any security is allotted, then PAS 3 to be filed. If any delay, 1,000 per day on the company and the offices, plus fine up to 1 lakh. In PAS 6, share capital reconciliation audit within 60 days after each half year. Late fee will be 100 per day. Maximum cap of fine will be 5 lakhs. SS7, alteration of share capital. If any increase or in share capital within 30 days of alteration to be filed, fine up to 1 lakh on the company. INC 22, change of register office to be filed within 15 days of resolution. Late fee penalty will be 2 times to 12 times of the nominal fees. INC 24, change of company name to be filed within 30 days of a special resolution. Fine if not filed within 30 days, fine will be 10,000 or plus 1,000 per day on the company and the offices. Charge on creation and modification of charges. 30 days of charge creation. Late filing penalty range from 2 times to 12 times of the nominal fees based on the delaying period. Charge 4, satisfaction of charges. Not paid within 30 days of form. The form is not paid. Then late filing penalty range from 2 times to 12 times of the nominal fee based on the delaying period. What are the most important statutory compliances that the company must adhere to the business? You can answer in what are the statutory compliances that the company must comply. You can say in chat box or in personal. Yes, Praveen has said as IT reports under the income. Few members has been explained income tax returns. There is no other except income tax return. There is no other report to be statutory documents. GST filing. say filing, DA, director KYC, collection of reports. Yes, income tax return, GST, and labor compliances. Labor law should be complied. If the ESA is not applicable, then insurance to be taken for laborers. And, Companies Act filing annual returns and MCA related documents. And next, TDS documents. Labor insurance is mandatory. IPS is not factory license to properly file and for property and often by local authorities or their factory license condition. Other regulatory compliance is import export code. If you having any having import, then you need to get an import export code compulsorily. You need to file at the time of import or export. Documents need to be filed. And CSR compliances, if the turnover is more than 500 crores and net profit is more than 5 crores, then average profit of the last 3 years of 2% of average profit of last 3 years to be you need to done as CSR contribution. And sector specific registrations and FSSI, if it's listed CP compliances need to be complied at every time. Did you have know any delay of PF and ESA payment can cost your company 25% more in taxes? Can anybody answer this question? This question.
I ask all the participants to share
Yes, sir.
your answers in the chat box.
Yes. Most of us has answered. Uh, yes, loss of deductions is there. Yes, if payment is delayed for a PF and ESA contribution, permanently disallowed under Income Tax Act. For employees' contribution, if it is not paid within a due date, then it is permanently disallowed. Then, if it comes to 1 lakh, the income tax rate is 25% plus cess is 4%, then 26% as a total rate of tax. If the disallowance is made, you need to pay extra additional tax of 26,000 as additional tax if you not paid within the due date. Then additional tax will be 26%. Then for every 1 lakh, 26 lakhs additional tax you need to pay if payment of PF ESA is not made within due date. You can ask for any questions having.
I request all the participants, you can just raise the queries. Sir, before that, Mr. Anpal sir want to give some short note about the thing. So I'm just making Anpal sir to speak with a short brief note about this.
Dear attendees and host of the meeting, good evening everybody. First of all, I would like to thank First Job Human Capital, Murali sir and Mr. Madan for organizing such a workshop to create awareness and knowledge sharing. Today, I hope my partner, Mr. Naveen, have covered extensively about the income tax return filing, as well as the tax audit, key clauses in the tax audit report. Apart from some basics about the ROC compliance. To supplement his presentation, I want to share a few more details with all of you. First of all, before filing the return, I would like to ask everyone to download a tax information statement and annual information statement, which will be available in your PAN in the income tax portal. This tax information statement and annual information statement will have all the data which were collected by the income tax department in relation to your permanent account number, that's PAN number. So whatever some specified transactions you have entered into, it will be captured by the department's data collection system, and it will be displayed to our individuals also, in order that we will file our income tax return with correct data. So some of those transactions are that TDS and TCS, it will be, it's displayed already in Form 26 AS. But apart from that, some sale of property, purchase of immovable property, and GST turnover, and the dividend received by you from companies, and interest from fixed deposits, even savings account interest also captured by the income tax department, and rental receipts. In case you have let out your property to a company's employee who have given your PAN number to his company for claiming the house rent allowance, then that is also reported by under the annual information statement. So you have to declare that rent also. So, and the cash deposits. So how much cash you have deposited in your savings account, and the credit card spending, as well as the shares, sale of shares, purchase of shares, and the mutual fund purchase and sales. Everything is displayed in the annual information statement and the tax information statement. So care should be taken by all of you to file the return, taking into account all those transactions which are reported in that TAS and AAS. And next, GST. So whatever you are declaring in GST in monthly returns, it should be correctly reflected in the income tax returns too, because the income tax and the GST both have a system of cross-linking of the data available with them. So they will share the data. Whatever you are filing with the GST, they will share with income tax, and whatever income you file with income tax, they will share data to GST. So necessarily, both the data should match to avoid future complications. And regarding the tax audit and income tax return filing, before filing that income tax return, you have to necessarily do a GST reconciliation. Whatever you have declared turnover in GST returns, monthly GST returns, and whatever input tax credit you have claimed in GST returns, it should be correctly reflected in your income tax returns too. And all others my partner have covered regarding that MSME, payment to MSME. These are all the important things. Payment to the MSME, it should be done in the time stipulated, that is 45 days. If there is the specified due date mentioned in an agreement, or otherwise it is a 15 days. So it should be properly complied with. So for that, you have to collect who are all the MSMEs and ensure that the payment is done in time. And next one is TDS compliance. So tax deducted at source and tax collected at source. So TDS and TCS, it should be necessarily complied with. So before commencement of year itself, you have to filter those suppliers or supplier of services or other persons to whom the TDS will be applicable. TDS or TCS will be applicable. So for those persons, you have to collect their PAN number also, because if normal TDS for a contract payment to contractors is 2%. If he has no PAN number, it should be 20%. So whoever is not furnishing PAN to you, you have to deduct 20% of taxation, TDS. So ensure that all your suppliers and vendors are having valid PAN number declared to you. And regarding expenses, so income tax stipulates that if any business expense you are doing is above rupees 10,000, it should be necessarily in through account pay check or NEFT or that electronic credits payments. So that is, it should not be in cash format. So no cash expenses is allowed if it is above 10,000. Likewise, the loan repayment and the loan receipt. If it is above 20,000, it should not be in cash. And it is advisable to get confirmation from your suppliers and debtors. So your sales parties and purchase parties. So you should receive confirm annual ledger statement every year from your suppliers and debtors, and you should reconcile their statement with your books. So it will be very helpful in future income tax scrutiny, if any. And if anyone is doing transactions with your associated enterprise abroad, there is a separate provisions called transfer pricing provisions. So it should be taken care of. That is, if you are doing with your related party who is in abroad, the transaction should be at arm's length. So to regulate that, a separate provisions called as transfer pricing provisions is there in the income tax. Take care to comply with those transfer pricing provisions also. Yeah, and over to you. If at all any clarification is required, you kindly post your queries. We will give our response. Thank you.
Thank you, sir. Thank you very much for your such contribution and support about the brief note of about the information. So I request all the participants to kindly ask your queries by unmuting by yourself, and you can just ask your queries either you can in the chat box or in your you can unmute and ask your queries.
Yeah. Hello. Am I audible?
Yes, audible.
Yeah, Mr. Navi, I just wanted to ask one simple question only, which I'm having a doubt on that. What is is there any exemption for the tax audit? Suppose I'm having one trust, okay, and my turnover crosses some 5 crores, 4 or 5 crores, which is the basic exemption as a company. But all money is exempted income. So whether I should go for the tax audit or I'm exempted from the tax audit also?
All are exempted income.
All exempted income.
So regarding which business you are doing, exempted income, right?
Suppose we are into that skilling and training business.
Okay.
That is, I got the 12AA certificate from the government also, which income is exempted, and that's I have received it. but my turnover is crossing it, some 5 crores, something like that. So whether I can go for the tax audit is exempted, or I have to perform the tax audit by the auditor?
Tax audit is exempted, sir. If more than fully in exempted income, then it is. If any part of income is belonging to taxable income, then it will be tax mandatory applicable tax rate. But if your cash, you didn't have any cash receipts more than 5% of total receipt, then you can up to 10 crores.
No, all are digital income only via NEFT
Okay.
or RTGS.
Okay. Any other taxable income is did you having in that income
No,
as
no,
ancillary?
all exempt.
All exempt. Then it will be not applicable.
It will not apply. Okay, that's it. Thank you so much for it.
Any other questions? Participant kindly ask in a chat box, and you can just unmute yourself to just answer your queries. You can just unmute yourself and ask the queries. And meanwhile, I'm just requesting all the participants to kindly fill the feedback form quickly, not to receive the meeting link. I mean, not to receive this recorded meeting to view for the later view, and also to get the e-certificate. Kindly fill this feedback form for a quick reference.
Hello. Hello, may I speak?
Yes, Ms. Kajal, you can just ask your query.
Thank you so much. It was an excellent presentation, very good for the layman. And I just wanted to know what is the impact if an MSME delays in payment to another MSME?
It's the same as applicable to me. If payment delay for MSME also, then the applicable rate of interest need to be provided.
How much is that?
It's depending upon RBI rate into 3 times maximum.
Okay. And what all you presented today, is it applicable pan India, or it is some state-wise?
No. It is applicable for pan India.
Thank you so much, Mr. Naveen. God bless you.
Thank you.
Madan, can you read some of the comments? There is some queries in the comment box, in chat box. Can you read to Naveen to respond?
Yes, I'm just reading the queries, but most of the queries has been Naveen sir has been replied. So one of the candidates asked the query, sir, kindly give link for how to take annual information and tax information. We need a link. And one person, Mr. Sumedh Kamle, asked the question, how can a business reduce its tax liability while staying compliant?
Majorly, it's deductions only, sir. It's whatever of the available deductions we can claim it. Majorly, there is no. We cannot reduce taxes by only tax planning itself only.
Okay.
Depending upon our turnovers, and we can having the specific tax planning calculations, and we can reduce us from that only.
And regarding this, how can a business reduce its tax liability while staying compliant? It's not there is no one word answer or one sentence answer for this. So each business has its own ways to reduce the tax even while staying compliant. It's there, but like one of them is that planning of depreciation. So if a manufacturing company is purchasing a plant and machinery, they are entitled for 20% additional depreciation. So these and all can be planned so that their tax can be kept minimum with proper compliance to the tax laws.
Okay.
So as insisted by various court judgments long before, so tax evasion is a crime, but the tax avoidance is not a crime. So the effective tax planning, you can definitely reduce the tax burden. So for that, we have to look into the business and the nature of transactions like that. It's not a one-word answer. Thank you.
Okay. And one of the participants, Mr. Karthikeyan, has asked the query, Sir, but client are filling for loan purpose also. As Navin sir has clearly mentioned that, so the filling will be required. So 2.5 lakhs above. So, but even if you have a tax, I mean, if you are having an income of below 2.5 lakhs, either it's a mandatory or optional to fill the income, I mean, ITR, sir.
It's optional only. So it's if you're having less than basic, and what are the conditions I have told? If you're having below that, then you can. It's your options only. It's mandatory only your income exceeding your basic exemption.
But this person is mentioning that for a loan purpose, they are asking the ITR statement, something like that.
Yes, you can file income tax.
Okay.
You can read all the queries, Madan, so that mutually the other participant can also get benefited through this.
Okay, I'm just reading one by one, sir.
Yeah.
So, okay, so Rama Lakshmi has mentioned deemed income, and Ms. Kajal Anand has asked the penalties, and Mr. Sumit Kamble has asked about the loss of tax deduction. And Ms. Gayatri has mentioned, from my knowledge, it should be the same 25%. She didn't mean for what she has mentioned this 25%. I think there is no much questions they have been there, sir. Participants, if you are having any other queries, kindly put the queries in your chat box. So I'm requesting all the participants kindly ask your queries in the chat box. So for Ms. Gayatri has asked one question. For personal loan or gold loan that people came, is that tax exempted?
It's loan. It's not an income for them. Then there is no problem regarding it.
Okay.
One of the attendees have asked whether tax is applicable for sale of land. Yes, definitely for sale of properties, be it land or site or building with or without building, all are liable to tax except for the sale of agricultural land.
But agricultural land, is there any other minimal or maximal, criteria? Is there, sir?
Yes,
Minimal
sir.
number of acres
Yes,
only
sir, it's
allowed?
there. So agricultural land, definitely it should be used for the agriculture.
Okay.
And there is a specific distance, like
Okay.
if it is a corporation, so any land that to come into definition of agricultural land, it should be beyond 8 kilometers from the boundary of that corporation.
Okay.
So like that, some conditions are there. So if you
Okay.
fulfill all those conditions, it is agricultural land, and the sale proceeds will be exempt from tax. Otherwise, you have to pay tax even if it is agricultural land.
Okay. And one of the participants, Mr. Karthikeyan, has asked the query. Sir, thanks for your answer. And I have another question. ITR for people going for loan, how we should statements, because ITR 4 is for non-maintain of book.
So yes, sir, ITR 4, you need not maintain books, and you can show an estimated income of 6% or 8% or 50% as per your case. But while going for loan, banks will invariably ask for the profit and loss account and balance sheet. For that, definitely you have to maintain the books. Otherwise, you have to give a list of expenses to your tax consultant and get it prepared. So even though it's not mandatory in income tax, but banks will insist for the same for processing of loan.
Okay, I hope Mr. Karthikeyan, you got the answer. And next participant, Mr. Anbalagan Muthi, has asked the query. My pension income is rupees 70,000 and STCG is rupees 1,50,000. Can I pay tax under tax bracket except STCG for financial year 25 to 26?
Yes, right. It's per month or 70,000 is the total.
Sir, my name is Anbalagan. By per year, annual income is 7 lakh per annum, and I have ST capital gain 1,50,000. How is calculated for the year 2025-26?
It's for short-term capital gain. If you opt for new tax regime, also your basic you have crossed the basic exemption limit. Then for up to 7 lakhs, it's your pension income is exempted, but you need to pay short-term capital gain on 1,50,000. It is not exempted under new tax regime. Even the 12 lakhs.
சார் அது தெரியுது எனக்கு. என்ன டவுட் அப்படின்னா, இந்த 7 lakh வந்து இதுல சேர்த்து பண்ணுவாங்க டாக்ஸ் பிராக்கெட் பண்ணும்போது, இந்த கேபிட்டல் கெயின் டாக்ஸ் பிராக்கெட்ல வருமா இல்ல தனியா பே பண்ணிருமா?
டாக்ஸ் கேபிட்டல் கெயின் டாக்ஸ் பிராக்கெட்ல அந்த 12 lakhs டாக்ஸ் பிராக்கெட்ல வராதுங்க. அது வந்து ஆட்டோமேட்டிக்கா வந்துட்டு 1,50,000க்கு நீங்க வந்து கம்பல்சரியா உங்களுக்கு ஷார்ட் டர்ம் கேபிட்டல் கெயின் இருந்தாவே உங்களோட நீங்க வந்து பிலோ 12 lakhs இருந்தாலுமே நீங்க பே பண்ற மாதிரி தான் இருக்கும்.
அப்புறம் டாக்ஸ் பிராக்கெட்ல வந்துடுறேன் நான். 7 lakhs இருந்தாலுமே டாக்ஸ் பிராக்கெட்ல தான் வருவேன்.
ஓகே,
இல்ல அப்படித்தானே? 7 lakhs அண்டர் 7 lakhs இருந்தாலுமே STCG வரதுனால டாக்ஸ் பிராக்கெட்ல தான் வருவேன் இல்லையா?
கண்டிப்பா டாக்ஸ் உங்களுக்கு அப்ளிகபிள் ஆகும் ஷார்ட் டர்ம் கேபிட்டல்.
சார் அதுக்கு அந்த பென்ஷன் இன்கம்க்கு யூ நீட் நாட் பே டாக்ஸ்ங்க.
அப்படியா?
பட் ஷார்ட் டர்ம் கேபிட்டல் கெயின் யூ ஹேவ் டு பே டாக்ஸ்.
பென்ஷன் இன்கம்க்கு 4 lakhsல இருந்து பண்ண வேண்டியது இல்லையா சார்? ஏன்னா
பென்ஷன் இன்கம்க்கு தேவைப்படாதுங்க. பிகாஸ் இஃப் லெஸ் than 12 lakhsனா கேபிட்டல் கெயினுக்கு மட்டும் டாக்ஸ் பே பண்ண வேண்டியது இருக்கும்.
அதுக்கு மாத்திரம் பண்ணா போதும்.
எஸ் எஸ் சார்.
சார் ரிபேட் அதுல இன்வால்வ் ஆகாதா சார்? ரிபேட்ல மைனஸ் ஆகாதா சார்?
ரிபேட்ல ஆகும் அதெல்லாம்.
அப்ப ஷார்ட் டர்ம் கெயின் அந்த ரிபேட்ல அட்ஜஸ்ட் ஆயிடுச்சுன்னா நம்மளுக்கு வராதுல்ல சார்?
இல்லைங்க, ஷார்ட் டர்ம் கேபிட்டல் கெயினுக்கு வந்துட்டு அந்த இது இல்லைங்க. இப்போ நீங்க வந்துட்டு 115 BAC வந்துட்டு உங்களுக்கு என்ன ஆப்ஷன்ஸ் இருக்குன்னா அப் டு 12 lakhs வரைக்கும் உங்களுக்கு வந்துட்டு salary இன்கம்னா எக்ஸம்ப்டட். பட் ஆனா ஸ்பெசிஃபிக்கா ஷார்ட் டர்ம் கேபிட்டல் கெயின் அதுல கவர் ஆகாதுன்னு இருக்கு.
ஓ, தனியா நம்ம ஷார்ட் டர்ம் லாங் டர்ம் ரெண்டுமே தனியா பே பண்ணி தாகணும்.
லாங் டர்ம் அப் டு 1 lakh எக்ஸம்ப்டட் வருங்க. பட் ஆனா ஷார்ட் டர்ம் கேபிட்டல் கெயினுக்கு உங்களுக்கு வந்துட்டு அப் டு 12 lakhs கீழ இருந்தாலும் உங்க சேலரி இருந்தாலும் அந்த ரிபேட் கன்சிடர் பண்ண மாட்டாங்க.
ஓ, ஷார்ட் டர்முக்கு நம்ம பே பண்ணி தாகணும்.
ஆமா, பே பண்ணி தாகணும்.
ஓகே சார், ஓகே.
Next participant, Mr. Karthikeyan, has asked with the tagging with the previous question of ITR 4 maintain book. Thank you, sir. Is UDIN is mandatory for that?
Sir, UDIN அப்படிங்கிறது யூனிக் டாக்குமெண்ட் ஐடென்டிஃபிகேஷன் நம்பர். If at all any chartered accountant gives his report, then it is he is mandated to quote UDIN by generating it from institute website. ஸோ அது சர்டிஃபிகேஷன் இருந்துச்சு அப்படின்னா டெஃபினெட்லி யூடின் பண்ண வேண்டியது இருக்கும். ஸோ சிஏ சர்டிஃபிகேட் இருந்தாவே இட் ஷுட் பி அக்கம்பனிட் பை யூடின். Without UDIN, CA certification is not valid.
I hope, Mr. Karthikeyan, you got the answer for the previous query. So, is there any other queries? Participant, kindly ask your queries in a chat box and you can unmute yourself and you can ask your queries. Sir, have one general question. So, if a person is a common person, but he is having an income of less than 2 lakhs, but due to for getting the bank loan, he has filed the ITR for a previous year, something like 2023 to 2024, he has filed the ITR. But for the next financial year, he has not filed the ITR, and for current year also, he is not going to file the ITR. But what happened? Whether the what will be happen if it will become any problem in future, or if he going to file, he needs to file any ITR in the future to continue this process?
Sir, if ITR is mandatory for obtaining bank or bank loans, if you go for any bank loans, they have asked for previous 2 years ITR, previous 3 years ITR.
Okay. Yeah.
So we need to file ITR to get their loan from their loans. So it's most probably you can go for continue with what are the procedures you have followed. It's better. Otherwise, you can if you not file for 1 year or 2 year, you can file an updated return, which will be you can file for up to the previous 4 years. You can file the updated return at the time when you have need to go for bank loan.
Okay. So
Sorry,
if you are
but
regarding the filing, as per income tax, it's not mandatory.
okay.
So the basic exemption, if your income is less than the basic exemption limit, or that criteria, some 8 or 9 criteria Mr. Naveen mentioned at
Yes,
the
sir.
beginning of his presentation. If you are not covered under that criteria, it's not mandatory to file the return. It's optional only. Even
Okay.
if you file for each year, you have to evaluate separately. So
Okay.
it's not that if you file for 1 year, you have to file for remaining in
Okay.
future also you have to file. It's not
Okay.
like that. So
Okay.
every year you have to see whether you are covered under all those criteria.
Okay. Okay. And I'm adding to that, I have a small add-on question. So if a person having some corporate bonds, okay, some corporate bonds of Tata or something like a so and so corporate bonds, the person has been bought, but every month for corporate bonds, they are, I mean, in market, they are getting the interest like a monthly basis of 10%. So what happened every month while he is getting the interest, some 10% of TDS has been deducted. So the TDS he didn't he didn't consume or apply to recover the TDS by filling the ITR. Whether we can reclaim that TDS amount of previous arrear in current financial year or next financial year. For example, he got TDS deduction on 2023 to 2024, but he wants to make the recovery. I mean, he want to claim the TDS recovery for 25 to 26 financial year of previous thing. Since you have been mentioned that 2 to 3 years we can make a club to May and make we can file the ITR. So whether we can claim that arrear TDS deduction also.
Oh, sir, we will not able to claim that arrear deductions. Only if you have income and we need to pay, if it's need to pay tax, then it will be allowed. If for claiming previous year deductions, that is not allowed. We need to claim within due date or before filing belated return. We need to before the 31st December. We need to file the return, then we need to claim the deduction.
Okay, sir, I got that. So Mr. Karthikeyan having one more question. So yes, Karthikeyan, you can just unmute yourself and you can just ask your queries. So I've just given you the option to unmute yourself.
Hello, sir. Hello.
Yes, sir.
Yes, Karthikeyan, you can just ask your
Sir,
queries.
sir, Naveen, sir, you have told that for the assessee, if they went for a loan, they will be asking books of accounts what they have maintained, right? If they file ITR 4 also, right?
Yes, sir. Compulsory நான் presumptive taxation la books of accounts maintain பண்றதுல இருந்தா நம்ம அந்த செக்ஷன் போறோம்.
Okay.
பேங்க்ல வந்துட்டு பேலன்ஸ் ஷீட் P&L கேட்டாங்கன்னா சம்டைம்ஸ் வந்துட்டு பேலன்ஸ் ஷீட் P&L கொடுங்கன்னு கேட்பாங்க.
சார் இப்ப இன்னொன்னு என்னன்னா இப்ப அந்த அசசி வந்து ஃபர்ஸ்ட் டைம் லோனுக்கு போறாருன்னா அவர் அதுக்கு முன்னாடி ப்ரீவியஸா ஃபைல் பண்ணிருக்க மாட்டார் ஐடி ரிட்டர்ன். நம்ம அப்பதான் ஃபைல் பண்ணுவோம். நம்ம அப்டேட்டட் ரிட்டர்ன் போட்டு அதுக்கு ப்ரீவியஸா 3 இயர்ஸ்க்கு நம்ம ஃபைல் பண்றப்ப சில பேங்க்ஸ்ல வந்து ஒரே டேட்ல நீங்க ஃபைல் பண்ணிருக்கீங்க, நாங்க இதை எடுத்துக்க மாட்டோம்னு சொல்றாங்களா? அப்ப எந்த மாதிரி சார் ஃபைல் பண்றது பேங்க்குக்கு?
மினிமம் வந்து கிரைட்டீரியா பேங்க் பொறுத்த வரைக்கும் ஒவ்வொரு பேங்க்குக்கும் ஒவ்வொரு கிரைட்டீரியா வச்சிருப்பாங்க. மினிமம் வந்து ஒரு ஐடிஆருக்கும் இன்னொரு ஐடிஆர் ஃபைலிங்க்கு வந்துட்டு மினிமம் 3 months வந்து கேப் இருக்கணும். ஸோ ஏன்னா அப்போ பேங்க் லோனுக்கு போறதுக்காக ஒரே டேட்ல எல்லாருமே ஒவ்வொரு இன்கம் போட்டு ஃபைல் பண்றாங்க இருக்கிறனால அதனால வந்துட்டு உங்களுக்கு வந்துட்டு மினிமம் பேங்க்ல ஒரு 2 months 3 months வந்து கேப் இருக்குன்னு சொல்லிட்டு அவங்களோட கிரைட்டீரியா வச்சிருப்பாங்க டிபெண்டிங் அப்பான் த பேங்க்ஸ் அதெல்லாம் இருக்கு.
ஓகே, இப்ப கேபிட்டல் கெயின்ஸ் இருக்கிறப்ப அதுல லாஸ் வர்றனால லோன் வாங்குறது எதுவும் அஃபெக்ட் ஆகுமா சார்?
இல்லைங்க சார், நார்மல் உங்களோட டோட்டல் இன்கம் என்ன இருக்குன்னு பார்ப்பாங்க. பட் ஆனா லாஸ் இருக்கிறதுனால அது கேபிட்டல் லாஸ் வந்து உங்களுக்கு தனியா வந்துட்டு ஃபர்தர் உங்களுக்கு கேபிட்டல் கெயின் இருந்ததுன்னா அது கூட தான் அட்ஜஸ்ட் ஆகும். பட் இது வந்துட்டு உங்க டோட்டல் இன்கம் எங்கேயும் வந்துட்டு இது பண்ணாது.
Sir, normally banks will be looking for your regular income. So,
okay, sir.
So in order to meet your monthly commitment,
okay,
so banks will look into the regular monthly income only.
Okay,
so,
okay,
since
sir.
the capital gain or loss will not be a regular one, generally they will ignore that. But if there is like you are trading in shares and getting a regular loss, maybe they will reduce that. So it all depends upon the banks.
Okay, sir. Fine.
Every bank will have their own system of assessment.
Thank you, sir. Naveen sir, thank you, sir.
So, Mr. Naveen sir,
Then if there is no any question, we can wind up, Madan.
okay, sir. So I have just asked one last question. So since you have been told with the shares or something, so if we are getting the shares in a market and we are making some buying some mutual funds, so if the interest what the companies are paying, okay, so they are been paying the interest by deducting the tax, okay. So if the interest is what we are getting from the profits of the share, if it is goes beyond 2 lakhs, so is there tax needs to be paid, right? The IT need to be paid, right?
Generally, if you receive interest, you need to pay and shown it as in total income and pay taxes for that. The basic limits, if they excess the basic limit, then you need to compulsorily file that.
Okay, okay, sir. Thank you, sir. So thank you very much for your support to have this session. This session makes us the spark on the plug to ignite the electricity. Like this session gives us some boost to know our rights and what is the needs to be filled out for the tax payables. And this session gives us a good knowledge sharing for all our participants. So once again, I thank you, Mr. Naveen sir, for your support and your idea sharing. And also I want to special thanks to Mr. Anbarsu sir for coordination and deliver the brief short notes about the sessions of this GST and IT fielding. So once again, I thank all the participants for supporting this event on behalf of First Job Human Capital. Thank you.
Thank you, sir.
Thank you, everyone.